Netflix shares rallying on the back of its top and bottom line beat. The streaming giant posted its most profitable quarter ever, despite some slowing sub growth. Michael Morris of Guggenheim joins us today, entertainment and media analyst, has a buy rating on Netflix and a target of 810. Great to have you. Happy Friday. Did it deliver everything you were looking for?
Almost everything, let's say. But there were also some positive surprises. So overall, it was a great quarter, in our opinion. Really reinforces both our buy rating and our confidence in the long-term opportunity for the stock. And really, if I was to talk about one surprise, I think it was the fact that the company started giving us some long-term guidance for revenue and operating profit into the next year. And that confidence on behalf of management with respect to their visibility in the model is certainly another reason that we expand our view of what the ultimate target multiple on this stock could be.
You point to some concerns that some had, I guess, namely slower operating margin expansion. How worrisome is it?
Well, I don't think it's terribly worrisome because I have two things. One, I have a guide that has some slower operating margin expansion than we had previously forecasted. On the other hand, I have the actual results in a quarter where they pretty much blew the operating margin away. So while the company doesn't take a conservative approach in the way they talk about their guidance, I think that it is a conservative approach to what that ultimate margin expansion can be, given that we think they will do even better in revenue on the top line than perhaps they are forecasting. We think that that will flow through to the profitability as well.
What about going forward? What did you learn about the sustainability of clearly the momentum in the ad business?
Well, the advertising business is still very nascent for them, okay? So I think that they're doing very good things in advertising. I think they are working toward a target of having about 10% of their revenue come from the advertising business. But it's going to take a while, and I think there are a couple of reasons. One, of course, they have to build out the infrastructure, and that is what they've been in the process of doing, and I think they're making big steps forward in late 24 and into 25. But the other thing is adoption of the ad-supported tier, and it's growing, and they talked about a sequential increase in subscribers on the ad tier of 35% for the second consecutive quarter, essentially. But it's still very early days, and people, I think, in general, appreciate the ad-free experience on Netflix, and it's a big part of the somewhat stronger growth on the subscription side and slower growth on advertising. But overall, I would just point out this is a content-driven story. It's the same story that it's been for the decade that we've been covering this. They simply give the consumer more for less when it comes to their video experience, and that continues to drive this flywheel that's driving subscriber growth, profit growth, and really value growth for shareholders.
I guess the only surprise is maybe, Michael, that we didn't get the price hike that many were looking for. And I also wonder if you think they are tempering any kind of aspirations to have more studio releases, shoot for Oscars, that kind of thing.
So two topics there. The first is on the price increases, and not surprisingly, the company doesn't really pre-announce future price increases to the market via their earnings call. But they've been very consistent that periodically, over time, they ask members to pay more, and in return, they try to deliver more. And I think as you look at their revenue forecast for next year, it is inclusive of price increases, and we believe there will be one in the U.S. as you go into next year. At the same time, they are offering consumers more choice by having this lower-priced ad-supported tier, so they're really meeting the consumer where they are. And with respect to content, I think at the end of the day, their North Star is trying to delight as many people on the streaming service for as much engagement time as possible. And while achieving certain accolades, say Oscars, et cetera, is certainly something I think they would like to be able to make sure they invest in, given that that is a reflection of quality of product. I think ultimately they're really looking for the content that consumers want. And when we look at the fourth quarter, I would really highlight these two NFL games that are coming on Christmas Day as being an expansion of the Netflix offering into a really high-profile area that we think will also expand their engagement and the number of subscribers they can bring in.